Good afternoon. Welcome, everyone, to our first Facebook webinar. Right, I'm Joseph, your speaker for today, your trainer for today. Right, for those who have already joined us, right, I will just do a very quick run through later on the registration. All right, how do you register for some of these feedbacks that you can provide to us, as well as for some e-learning resource that you can tap on through this registration. But let's wait for another minute or so for the rest of the people to come in, and then we will start together. Yes, thank you. Like as promised, right, I'm going to run through with you the registration through our Finlearn Academy learning platform. Right, so very quickly, right, for those who have just joined us, right, welcome once again. I'm Joseph, your speaker for today. Let me just quickly show you the slides, okay, for the registration. Now, what is this all about? Very quickly, right, this is actually our new platform extended to you. A few things. One is you can give feedback concerning the training that you received today. All right. If you think that no, it is good, give us your encouragement. If you think that no, there are areas to do more, tell us. If you think that there are areas to improve, tell us why. Because no doubt this is a free and unbiased sharing. We would like to make sure that the next session and beyond, we continue to deliver quality sessions like this to you. Therefore, your input is so important to us. So without further ado, let me just quickly run through with you, how do you then register for this self process, yeah? So first and foremost, right, 3 steps. Let me just summarize them into 3 steps. I name it application, activation, and then registration. So, right, AAR, application, activation, and registration. Okay. First, scan in the QR code, or you can prefer to use the hyperlink. You can do the same, right? My colleague will be also sharing the hyperlink into the Facebook chat box for your use, right? Easier convenience to click on it. Now, once you click on it, you will come to this platform where you see this Finlearn Academy. I'll just go slightly slow. Right, we are on step 1, application. You can then register either using your Facebook account, Google account, or you prefer using your own email address. Let's assume you use your email address. Okay, so once you click on it, there will be some simple information that will be needed of you to be filled into this form. Okay, fill into this form. So just do so, all right? Take a minute or 2, all right? I think it's less than a minute. All right, anyway, so just fill it in, all right? And then click submit. And you will see this pop up saying that success, all right? And that will complete our step 1. Okay, just take a minute for you to do so, right? And I believe the link is also shared to you by my colleague in the Facebook chat. Right. Okay, let's do that. Okay, let's do that. And then what I'm going to do now is the reason why I'm looking over there because I got 4 screens. So I'm just trying to make sure that I and I'm updated on certain of the updates and make sure that this session is delivered timely and also in terms of information sufficient to you. All right. So let's say you already submitted submit and you've been prompted success. The next step, which is step 2, right? Activation. Now go to your email address, right? Go to your email, and then you will see an email sent to you, right? Seeking your activation. So what you do is that you click on the activation, right? And then you will be invited to personalize your password. Here, you just key in your new password and confirm and activate. Now, things to look out for is 12 characters, right? At least 12 characters, 1 upper cap, 1 lower cap, 1 number, and 1 symbol. And that's it. Right, so that will be step 2. Okay, let's do that, right? Step 2. And then with that, right, once that's done, then we'll proceed on to step 3, which is the final step. Yeah. Right. Okay. Right. So far, so good. All good, everyone? All right, great, fantastic, wonderful. It's a beautiful afternoon. Thank you for spending the time with us on this talking about insurance. Yeah. All right. Now, final step, registration. So what you do is go back to the Finland Academy. All right. My colleague will then post the same link into the chat box again. Now you can then log in using the new password right into the platform that shared with you earlier. Now, once you log in, all right, enter your password as well as your email address, all right, and with that, you'll come to this setting. We will see this and look for enter course ID, right? Once you click on that, you will see this pop up to this narrative shown here. Key in this workshop reference, WK10035, and then click submit. Okay. You're going to rest here for you to just a short moment for you to just follow through the process, right? Okay, follow through the process. Okay, once that's done, right, you would have entered into the course proper, and that's where you can see your survey and assessment. Right, help us, right? Help us. Your valuable feedback is so important to us. So therefore, help us to complete the pre-training for survey and assessment. Right, this may take a few minutes, all right, maybe 2-3 minutes of your time. Right, once that's done, all right, then you can then submit for the pre-training. Right, you probably will see a post-training, but don't touch it. Right, we'll do so right after nearing to about 1:30, right, for the post-training. So I'm going to rest here for a while for you to do the needful, all right, and then we will start 12 p.m. Yes, so let's do the registration. Like what I mentioned earlier, when you register, first you can give your feedback so that we could continue to deliver the sessions, right, and then hear your voice on certain areas to do more, do less, do the same for you, all right, and as well as at the same time, there are some resources that's made available to you through this platform whereby you can do some e-learning as well. Okay, I'm going to rest here for a short while for you to do the registration, and then we'll start sharp at 12 p.m. Thank you, everyone. Thank you. Right now, time is 11:58. We will be changing the slide shortly over to our presentation for today. Yes. So in a minute's time, I'm going to switch it back into my presentation for today. Okay. All right. All right. So at this juncture, I presume that those who have registered who have already done so. Okay, I will be switching over to the new slides now for the presentation. And now time check, 11:59, 1 minute away. So for those who are still on the questions, not to worry, right? Complete the rest of the questions. It's important. The reason is, again, I cannot overemphasize this, to make sure that the webinar, the future webinar and the current one continue to deliver the quality, and then, to meet your needs, or even the areas that you think that we can do more, let us know, okay? All right. All good. Everyone all good? Fantastic. Okay, wonderful. Today's topic, we're going to talk about types of life insurance. Do I need it? All right, good question, isn't it? A lot of us will be probably asking, and I would like to also thank Larry Hakuna as well as Sumrat for the comment that he has put into our Facebook chat. I will address it right after the session and during the Q&A. Right, very relevant question, very good question. Why? Because it touches on what we're going to cover today. I hope you're listening in, Larry, and as well as Somrad. Right, thank you very much. Right, so brief introduction about ourselves. For those who are new to us, Institute for Financial Literacy, it's a collaboration between Money Sense and Singapore Polytechnic International. So what do? We bring to you free and unbiased talks like this. Free meaning you don't need to pay for it. Okay, it's free, including our workshops and our talks that is you could register online, right? Which I'll flash to you some of the resources, very useful resources, later part of the presentation. So free, since it's free and unbiased, and since it's for education purposes, all right, and information purposes, whatever that I've cited today concerning names or examples, right, is purely to help in explaining the principle and concept we would like to share to you. All right, so it does not amount to any form of financial tips or guidance, right? So do consider approaching a licensed financial advisor. Do approach a licensed financial advisor to seek their opinion, guidance, and also before you make any decisions. Yes. What do we mean by license? We're going to touch on that, right, in part of our sessions today. So stay tuned. Okay, and then at the same time, we're going to look at the no solicitation at this juncture. Perhaps there are some topics that we touch on, maybe very close to our heart, and we are all very passionate about sharing. Just be mindful that we like to hope that you keep this environment conducive for all the people who have tuned in today, right? So IFL and its trainers do not endorse any solicitation between participants and will not be held liable as explained in this slide, okay? All right. And then just help each other to keep the environment conducive. Let's do some housekeeping here. If you have any questions, feel free to put into the Facebook chat box, okay? I'll be most delighted to address all of them, if not most of them, and share my thoughts on them, okay? And of course, in cases like this, let's show mutual respect to each other, right? In our words, in our thought, actions, yeah? And also no recording. You will see us, the post recording after that in our Facebook, so you can pick that up. And should you need any training materials concerning today's session, you write to us, all right? Give us your request, and then our friendly admin office, IFL admin office, will be most delighted to follow up with your inquiry. Feedback, like what I've explained earlier, feedback is important. So therefore, just now we did a pre-registration, all right, for the feedback, and then later we'll do a post-training feedback on this, right? So for those who have already done so, thank you very much. For those who have just joined us, not to worry, I will flash the feedback slides again at the end of the session, yeah? Yes, we are talking about insurance today. Am I right to say that? We are talking about insurance today. So if you're looking at this, right, this is something that we have been doing last year, and then we're going to, because of the good response from the public, we're going to do again this year, right? And with your support, we probably could do it more often in the future. So what is this? This digital financial health clinic. Beyond what's being shared today, you probably find that there are some personal questions or certain situation that's specific to us that you would like to talk to somebody on a one-to-one session. So this is what is served. Okay, it's limited to 30 minutes. All right, you need to sign up based on this QR code over here. The slots are taking up quite fast, right? Ever since we have been showcasing this to our classes. So do consider this, right? If you have any question about insurance, you can do so. But just to assure you, the session is not a marketing session. So the people that you're meeting are volunteers, financial advisors. And the condition is that there's no selling. That means there won't be any products being recommended to you or any form, right? So it's purely consultative on that basis, yes? Okay. So gentle reminder again, for those of us who have done the pre-training registration for the assessment, right? So I'm going to flash this again, just in case you have managed login already and got your password already, but you have not gotten the code course ID, WK10035. Complete the survey and assessment. Right. So I'm Joseph, your trainer for today. So we'll take us from now until 1:30. Right, lots of things I'm going to share with you. 1:30 is relatively short, but so if you think that there are more that you would like to know more in depth, consider signing up for our workshop and talks as well. Yeah. All right. So where are we going for today? All right. Life insurance. What's that? Some people may ask. I started off not knowing in insurance, and I find slowly attending course talks like this, and then reading up, and then reading newspaper articles and find out more. Am I right? So I put them all together as some of the three basic questions that we'll probably be asking ourselves. What? My choices. What is insurance? What are some of the basic product that's out there in category that could help me to have a better picture of what's insurance? So we attempt to explain this, right, in one of our slides. Why? Why do I need insurance? I'm self-sufficient, I'm okay. Do I really need insurance? We're going to touch on that. Okay? And then finally, we're going to touch on how this decision part, right, will be the bulk of today's talk. We're going to talk about identifying the gap, the insurance shortfall, the gap, right, and then understanding certain of the products, right, basic products about life insurance, and trying to understand the features so that we can match back the needs, our needs, and then how to make a decision. So my decision. We're going to share with you also direct purchase insurance, whereby certain features you need to look out for, whether is this suitable for you and me, all right? So we're going to touch on that, and then we'll share with you a case study about a certain real case, all right? And I'd like to hear your feedback. Now, I always start off my session not doing monologue, means what I talk to you and then just me talking to you all the time. No, all right. I prefer that we have some interaction here, all right? Even though I don't see you, I'm sure, right? You're there, and you are giving the support, and I think that it's important that to deepen the sharing, that deepens the learning. We could then do something together. Example, I'm going to launch some polls for you to participate, to hear from you, your feedback, as well as some chat. If you think that there are some things that you would like to, when you're invited to share, you could then also put into the chat, and then so some interaction over there. Now let's start with the first part. Okay, what? My choice. Okay, so what are they? Okay, so why, generally speaking, what is the primary reasons for buying insurance? Okay, over here, there are 4 I've listed here. I'm going to launch a poll. Poll number 1, you'll see it popping up in your Facebook. You then can choose, right? And I'll share with you the result shortly after that. So let's rest here for a while for you to think through and then put your input over there, right, into the pop-up, and then you let us know. What do you think? Is it a form of saving, or is it a form of protection? Here we are talking about what? Primary purpose of insurance. Am I right? Okay. So and also, is this a form of investment, or could it be all the above? I believe the poll has been launched already to you, so feel free to respond accordingly. Right, and then my colleague will be sharing with me the results, and I could then, articulate back to you. Okay. All right. So let's pause for a moment for you to input your response. Okay. Good. Great. Fantastic. Okay. Fantastic. So I'll wait for the results. Okay. Now, I thought I'll read out to you. Okay, I'll read out to you rather than bog you down with the writings. Okay. Choice number 1 is 0. Choice number 2, 57%. Majority of us, more than half of us, feels that it's primarily for protection. And then 14% says investment, and 29% says all the above. Now, generally speaking, like the name suggests, right, insurance, right, it's primarily for protection, primarily for protection. And let me just share with you some of the general definition of what is insurance. In a nutshell, okay, I'm going to sum this up in a nutshell. It means, right, we are paying a certain amount, or maybe a smaller amount of premium, smaller amount as compared to the payout, of premium, right? And then with that, right, we gain the comfort that in certain situation or event that happens, there is certain financial payout that help us to cushion against any financial impact. So in a simplified way, basically buying a protection. Yeah. So insurance set out, right, with the primary purpose for protection. Now, be mindful of this. When we enter into such an agreement, it is also a legal contract. When that illegal contract, it means that everything, the payout and whatever stipulated based on the terms and condition, will then has to be observed. Yes. Let's move on. Okay, let's move on and then look at what are the general products of insurance that's available. I will categorize them into the following 3, right? First, health, right? This is got to do with healthcare. If I am not well, or I'm because of disability, my income is affected, I need treatment, some payouts, okay? So health care insurance will come in to help, if I have that in place. Then the other category will be general. General means, like, for example, if I buy a house, right, I would want to insure my house against fire. So if I buy a car, I'll probably get some insurance or, comprehensive coverage to cover third-party liability, etc., etc., etc. So these are under general. Now, the third category is life. Now, life generally can be divided into unbundled or bundled. Now, unbundled here, we're talking about terms. Don't worry about the names for this. I will explain later when we come to the stage of how. Okay, so term, right, and then whole life, and then endowment, and ILP, which stands for investment-linked products. Okay, now today's focus, of course, we'll be talking about life. Am I right? So the topic itself, it talks about types of life insurance. So the focus will be there. Now, what does it cover for life? Okay, it's a long-term protection. Okay, it generally covers these few areas. Death, that means I die before my time. All right, and there are certain my loved one need to be taken care of. So this insurance will come in handy. Terminal illness. Terminal illness, in short, it means that it's for certain that I will pass away within a certain stipulated time. Let's say 12 months. Within 12 months, I'm going to pass. So that will be, with the medical confirmation that there will be classified under terminal illness. Of course, the plan that you're buying, you then have to look at it and say, how is it defined there? So I'm just giving you a general overview. Yeah. Critical illness, something that, that, for example, strokes, heart attacks, or etc., that needs prolonged treatment. Okay. Generally, under Life Insurance Association in Singapore, there is they lay out 37 major critical illness. Now, be mindful, right? When you buy, if you are buying a life insurance, not all of them cover all the 37. And to what extent and how is the payout? So something that you would like to look out for, which we'll explain more later. Okay. Total permanent disability and disability. Now, what's the difference? Of course, other than the number of words. Disability, generally speaking, it means a short-termish, relatively shorter period as compared to total permanent disability, whereby I cannot perform my work. And that, I would probably in the foreseeable future be able to recover. And then, so this is slightly shorter. And so therefore, with this insurance, how to cushion against any financial impact arising from such incident. Total permanent disability, it means that for the rest of my life, I can't work. Don't talk about my current work, but any other works, So I'm totally and permanently disabled, right? So the rest of my life. So that's the coverage. So there's a difference. So something to look out for, if you're looking at your policies. Okay. So how much do you want to provide for yourself and for your family? Have you ever thought of this? Have you ever thought of how much is enough? Or is it just, when a financial advisor approached me and said that, Joseph, I think you need $1 million. And then I thought through, yeah, maybe I need $1 million. But what's the rationale behind? Is there anything that could then help me to understand whether do I really need $1 million coverage? Because why it comes with a premium. So these are something for us to ponder, which we will then address under how my decision. Okay, so something to keep you in suspense on. Just keep that in mind. How do you determine the amount? Now that itself just now would have answered the question of what the choices, meaning why do I buy insurance? The insurance primarily for protection, right? And also the different category of insurance, health, general, and life. And today we're talking about life, right? Bundled and unbundled. Okay. So why do I need insurance? Now take a moment and ask ourselves, not so much about the amount, but rather the reason, the motivation behind buying an insurance, right? So take a short few seconds to think about it. Why do you buy the insurance that you have? Or why do you contemplate of buying insurance? Why? What are the needs you're trying to meet, that you and me trying to meet, right? Think about it, right? Feel free, if you think that, that's something that you would like to share in the chat, you can also do so, put into the chat, various reasons, am I right to say that? Okay, so let's feel free to share. Sometimes by sharing, we're also benefiting the rest. Why? Because, hey, you mentioned this, I didn't pay attention to this area, perhaps I could also look at that. So things like that, right? So feel free to put in the chat box if you think that there are things that you think that it's that you're comfortable to share. Okay, all right, good. Unforeseen tragedies. I see Larry. Hi, Larry. Good to see you. Thank you for your questions. I just mentioned your name earlier before we start. I will come to your question later. Yeah. Okay. Good. All right. Thank you very much, ladies and gentlemen, for your sharing. All right, and then and now I'll just go on. Generally speaking, there are areas that could be of concern to us. Our needs, first and foremost, standard of living. Now, here we're talking about long-term coverage and protection, right? Itself means life insurance until the day or until a specific period of time of protection. So I would like to ask myself, what kind of standard of living if something happens to me? Right, if I pass on, and then how is the standard of living of my of the people that are left behind, and also if let's say I don't pass on terminal illness, disability, or critical illness, what kind of standard of living, right? Do I envisage or need? Okay, how long do I live? Right? Do I able to then take care of myself when I'm old? With certain protection that's in place. We all know that based on certain survey, right, Singapore statistics, right, what is the lifespan of Singaporean on average? Can somebody share with me? Can somebody put into the chat box if you have any come across the numbers before? I'm talking about average, not distinguishing between ladies or gentlemen, yeah? Just an average or Singaporeans. Anyone? Feel free, right? Of course, I will share my findings. Okay? Right, anyone? Larry says 82. Thank you, Larry. How about the rest? Anybody else? Okay, put it in. Okay. If you think that it's longer, shorter, doesn't matter, just put it in. I always believe this, right? In the setting like this, it's always good to share and learn together. Whether right or wrong, it doesn't matter. But when you're out there with your own decision, try not to make mistakes. Am I right to say that? Yeah. Okay. I have this Tay, right? Southern's Tay says 85. Right. Thank you very much. Wonderful. Now let's not keep you in suspense. All right. It's about 84.7, about there, about or close to 85, like Mr. Selston, right? Selston mentioned that, right? It's about close to that. Now, why I say that? I need to dwell on this a little longer a bit. Why? Because I found the statistics from the Ministry of Health that talk about what? That talk about Singaporeans, right? The statistic is 2019 number, by the way. So you can go to the website and find out from there. And that roughly on average, right? When will a person fall sick before passing on? That means really sick. I'm not talking about flu. I'm not talking about having headache and stuff like that. Now, based on the statistics, right, it's about 76 years. Now, can you imagine from 76 years until 85 or 84? That's X number of years, right? And so therefore, how long? So all these are really something to think about in the future, right? And then the existing coverage, do I have enough at this juncture? Do I exactly need insurance at all? If let's say I have a safety net to fall back on, assets, cash, or some investment, are they enough to sustain me through when a situation or event that incurs and that has an impact on me, can I look to them? So these are the few things. Do I have the need? And then the number of dependents. Some of us are supporting our parents because they are of age. Some of us has children to take care of. Some of us take care of our siblings. Now, I conducted quite a number of courses, and every time when I talk about financial planning, financial money management and things like that, I always ask the class some question and option for them to choose. Why do they want to manage money? And one of the things that come out very commonly and prominently is to take care of my loved ones, right? So you and me, I'm sure we do have our own loved ones that that perhaps at this juncture I'm still receiving care and help and support, but in the time to come, it probably is the reverse, right? So age and the number of dependents is important to consider, particularly if disability happens or some critical illness or some terminal illness. No, somebody's going to pay for it. It's either for myself or it could fall on the lap of our loved ones. Yes, on our loved ones. So be mindful of this, and then budget. How much can I afford? Right? If I work out the budget and realize that I could only afford X number of money for premium, then how should I approach this? We're going to talk about it later. And then the debts and other obligations. Now, after working out all my budget and then the numbers, my net assets, my net worth and things like that, do I have the ability to service my premium with all the obligation already existing? Yeah. So these are the few things. Am I right or can I say that these are valid concerns? I could identify quite a number here for myself, right? I hope that by looking at this, you also can help us to think about those areas. Okay, so we are talking about needs here now. So with that as a backdrop, it forms the motivation and reasons why you want to put certain protection in place. Yes? I hope I don't sound like a salesman. I'm not here to sell you any policy, right? So I'm not, all right? I'm not, all right? I'm here to share with you why are the reasons we are looking at insurance. Now let's look at how now, right? How now? Decision, my decision. Now, if I have identified the reasons and the motivation to buy my insurance, then how do I approach it? How do I know I'm buying too much, too little, or enough? So I'm going to share with you 6 steps. How many steps are there? 6 steps. What are they? Very quickly, right? Look at this, right? Number one, list your goal for buying insurance. Now remember, just now I shared the why, am I right? The needs, right? So that will form the goal, the reason, the motivation, the purpose of us, you and me buying the insurance. Okay. And then with that as a primary purpose for insurance. And then we will move on to say, estimate amount that we need for each of the events. Okay. And then we'll calculate the coverage that currently we have, if you and me have any, right? Then we see, how much coverage already existing there. And then we talk about from the estimated minus the existing coverage, we work out the gap difference, right? And that's where we could then identify whether these differences, how much need to be covered, all right? Need to be covered, yeah? And then look at our budget, see whether we could afford that, okay? And then finally, choose the product, which we will talk about, introduce some basic features about the products we talked about just now, term, whole life, endowment, investment-linked products, and then see how this feature match against our need. And then, we'll do some exercise together. Is that okay? We'll do some exercise together, yeah? And then finally, review your policy regularly or when you need it. So far, so good, everyone. If you're all ready, right, let's start the process, okay? Identifying the gap, okay? Now, I'm going to share with you some digital tools. Exciting here. Why? Because it's free. It's out there. You can use it. It's web-based. So let's bring on the first one, okay? This is the CPF insurance estimate. Anyone use this before? Anyone use this before? If you have, just put a yes. If not, then it's okay. It doesn't matter. I know I'll run through with you very quickly on this. Okay. Anyone use this before? Anyone? Okay. Then allow me the liberty to bring you through the calculators very quickly. Yeah, very quickly. Okay. Now look at this. Okay. Now this, when you scan the QR code or the hyperlink, it will bring you to the landing page in CPF Insurance Estimator. So this insurance estimator does what? Firstly, it will be some drop down, right? You need to key insert those drop down. It is quite extensive. Some of the things that are being asked are quite detailed. So what you do is that it forces me to think about myself and take account of those things, right? Of course, those irrelevant ones, I'll put 0. Those relevant, I'll put it in numbers. And then my immediate expenses, right? I'll put it in. And then the next one, dependents needs. And then the children's tertiary education needs. And finally, existing insurance and assets. What do I have already in place? And so this whole calculator works on the formula as shown here. Okay, 1, 2, 3, 4 plus together minus 5 gives you the possible gap. Now, again, the name suggests that this is an estimator, okay? So you can actually go to this hyperlink or the QR code, right, to experiment with this tool. But I thought it'd be good if I could bring you there, and do a live demo. How about that? How about that? Would that be okay with you? All right, anyone? All good, right? So let's do that together, okay? I'm going to bring you there now. So let's assume you're really scanning the QR code or hyperlink, right? You will come to the CPF page. But in case, so this is a real life page, huh? In case, if you have forgotten what Joseph has shared with you, the link and hyperlink and stuff like that, how do I get there? Let me help you to navigate through this website, yeah? So if you look at this, tools, right? So this is the CPF website. Look at tools. So you click on tools, right? It will bring you to tools and services. Okay, and then you click on calculators, all right? You click on calculators, right? It will show you lots and lots of useful calculators. Since we are talking about insurance, let's scroll down right to the bottom, where the other calculators are found. Okay, so you click on show all, right? So you have an insurance estimator here. Now, let's see what happens when you click on it. Okay. Now, don't you see? Do you see that this is exactly the same slides that I've shown you? Exactly the same, right? Now, you need to read through the disclaimer and also the conditions, right? Without clicking this, I can't proceed. You can't proceed. So I need to click on this, okay? When I agree, right, what will happen here? I'll click on the outstanding liabilities, all right? So these are the mortgage loan, relevant, I put it in, otherwise leave it, right? Car loan, study loan, etc., etc. And then work out the numbers for me. Now let's fill it in on your own, later you can experiment with this. Immediate expenses, funeral expenses. Some people say, hey, Joseph, can you not talk about funeral? But seriously, I mean, if I were to pass away, somebody got to take care of my funeral, am I right? And sometimes it can be quite costly. So depending on our custom and our customs, right? I'm a Chinese, so not too long ago, my dad passed away a few years ago, and the funeral cost end to end runs into more than 20,000+, right? So therefore, if it falls on our lap and we are not prepared, and then it could be a challenge to some, or if not most of us. So let's do that, right? Find out the expenses and put it in. Estate duties, right? If there's any, probates, okay, income tax, emergency funds, and other expenses. So these are basically the immediate expenses that we require. If you are not sure exactly how to use it, you can put an inquiry here, the question mark here, and then you see some pop up to explain. Now that takes care of the immediate expenses. Now the dependents, that's where you then key in the number of the living expenses that currently has, all right, and then expected returns if there's any form of investment or stuff like that. Now there is also a section that caters to inflation, right? So it's forward-looking, future, projected. So key in that if you think that, of course, you may be asking me, Joseph, what's the number to put in? Well, I guess you can come with an estimate, right? Or when you talk to your licensed financial advisor, that could also be a topic that you could explore, what is a more feasible number that you can work on. Okay, so dependents needs. Then let's go on children. So here it caters altogether 5 children. So you can key in accordingly the education, the cost, the fee, etc. Even inflation rates. Okay. With that, finally, right, we come to the existing insurance assets. So if I click on it, fill in those as relevant to you. Those are not, just put 0. Now, this will be those so-called safety net that I can fall back on, whether it's in my existing policy or my assets, right? With that, then the equation that I shared with you earlier in the slides, right, will then work out the gap, estimate the gap. So far, so good. Oh, probates. Probate is when, Larry, probates, okay, good, thanks for the question. Probates is when, let's say, for example, if I've got a will and I need to go to the court, right? The executor need to then obtain certain documents in place. I will not go into details, but so this is a probate whereby there are certain costs involved, right? So you need to then apply to the court, as an executor, all right? And then with that, so otherwise it'll be a letter of administration whereby if there's no will, then you need to do otherwise. So these are a few things. In more details, right, on that, how to prepare wills and things like that, come for our will, how to write a will or things like that, come to our course. We will then deep dive more into that. So Larry, thanks for the question, right? Thanks for the question. Good question. I'm going to move these slides away. Okay, I'm going to move these slides away, and then we'll go back to the other slides, yeah? Okay, so this is a presentation again, all right? And then the next thing we're going to look at is second tool, right? This is called My Money Sense tool. So what does it do? Now, this tool is offered to you by Money Sense, right? And then what happened here is that this is a web-based app whereby you could then key in using your SingPass to do what? To pull some information as a desktop, but of course this is your choice. You can choose to log in or otherwise, right? And you think that you like to know more about what the platform offers, right? You can visit the website over here. Okay, so what it does is that when you key in your SingPass, right, for Singaporeans, and then with that, right, you can then pull out information about your HDB, your IRAs, and your CPF, all right. Whatever that is allowed to be put in there. You can also put in periodic information updates from banks, right? Certain banks that is in the panel, not all banks, those banks are in your panel. Over here, why am I bringing you this Why? Because with that, right, you can then consolidate and plan. Remember the budgeting? As well as also with this lock-in over here, you can also pull in insurance. The insurance, the policy that you have with the following 7 insurers mentioned here. Of course, you need to give consent though, right? So you give consent, and then, this information will pull in. Now, then you may be asking me, Joseph, there are insurers that's offering platform sizes. Agree. And I believe many of them are very good. Now, the issue is this: when I'm looking at one insurer, I'll probably be looking at just those policies that I have with that particular insurer. Am I right? So over here, if you have a couple of them from a few of this that's under the name mentioned here, then you can pull it in and then at one stop to look at the insuring the policies, existing policy that you have. So what will you see? The summary of the policies, all right, the types of policies, and the details of the insured policies, right? So this is what you'll see on the My Money Sense platform. Okay, right, and then you could remember we take stock of our existing policy, right? So that is one helpful platform that could help you to do so. Now, let me go on to the third one. The third one, yeah. Third one is called Compare First. Now, what is Compare First? Compare First is a platform, it's an information platform that is co-developed by CASE, right? Also Consumer Association of Singapore, and then with MAS, with Money Sense, as well as LIA, Life Insurance Association of Singapore. So what does it do? Essentially, over here, when you have already identified what you need, remember the gap that we worked through, your CPF gap, all that, right? With that, right, you can come here and then key in certain numbers that you think that suit you, and then your needs, and then they will generate out products, right? Recommend some products to you, but it doesn't sell to you. So what you do is that you can look at those products with the information there and call the respective insurer if you are interested. Okay. Now, how does it work? I'm going to bring you there to look at this platform and how it works. Yeah. But before that, I like to look at one case study. All right. Just take this simple case and then apply to it to the website so that you have a more live demonstration. Let's assume Joseph, right, I have a budget of $5,000. What do you mean by that? $5,000 to pay premium for a year. So every year I've got $5,000 set aside for my premium. And I'm looking at what? Endowment plan. Now, some of us may be asking, what is endowment plan? Right? Hold it there. I will be talking about products shortly after that. Right? And then the endowment plan must exist for 15 years, and with the money I could then cash out. All right, or whatever stipulated then. So how do I then use this information and then apply it to what? To the Compare First platform. Let me just bring you there now, right, very quickly. Okay, so if you scan in, this is the platform, by the way, all right? So it's these things moving, right? So this is not a slide, this is a platform, the Compare First platform. So what you do here is that, okay, let me check, make sure that, okay, you all can see the same, right? I can see that the slides are visible too. Now, over here, the platform over here, of course, this is the web link. Huh? Okay, you will see direct purchase insurance, which we'll talk more later. Term insurance, remember, unbundled. We have a bundle, unbundled, right? So term is under unbundled, meaning what? Purely for protection. Whole life protection, whole life products, endowment products, as well as investment-linked products. So this platform talks about life insurance and is categorized into these 5 areas. Yeah. In fact, if you talk about direct purchase, it's just one way of buying these plans, right, from term as well as whole life, which I'll explain later. Okay. So how does it work here is this, right? With this, right, you just click on any of those that you think that the feature that you preferred. Okay. And then let's assume endowment, right? So we are looking at endowment. Let's assume that my age is much younger, much younger at let's say 2001, okay? And then January the 1st, okay? So I am born on January the 2nd, 2001. Okay, I'm a gentleman, and then I smoke. No, I don't smoke. Let's just say I don't smoke. And then my premium type, I like to pay it annually. Annual and single means I pay one shot, one lump sum. Annual, single means I pay one shot, one lump sum. Annual means every periodically I have to service my premium. Average, I'm looking at 15 years, right? So over here, there's a range of 15 years. Now, premium amount, I got 5,000 to spare, right? So I'm looking at 5,000. Right, critical illness, yes, I would like it to be covered. Now, then from here, I could then look at lowest premium, highest premium, whichever you prefer. Let's start with lower. Okay, I'll do a search very quickly. And of course, there are some terms and conditions I have to go through. And then, if I agree, then I can proceed. So let's say I agree, and then you can see that it's spinning. So it has generated some information. There's no result. Like, hang on a minute. Why is there no result? Okay. Give me a moment. Let me see. Okay, annual. And yes, total premium. Endowment. Okay, let's see. Oh dear. Why is there no result? Okay, give me a moment. Let me just do some changes. Maybe I'll put this to 85. Okay, let's say 85. Okay, I don't know what happened. My apologies. I need to then apologize for some hiccups over here. The premium payment, just now when I do a test run, right, it works, all right? So maybe something went not exactly right. Let me just try again, okay? I'll try again. Okay, I am looking at endowment, okay, and this is the age male, and then do I smoke? No. Okay, and annual 5,000, critical illness, let's say yes, and then we do a search. And I agree. Oh dear. Okay, or okay, there is, okay, be assured, right? Be assured. Just now when I tried, it works, okay? I don't know what happened, but roughly that's how it works. Right, it will generate, okay, let me just go on to explain. It will generate quite a few of these products that you could do a comparison. So what you do is that they will show you, right, the names. Let's say, for example, there are 10 of them. You could actually drag and put into this compare products, maximum 4. And then they will put, right, chatterbox side by side for you to do a comparison. And then for summary, they will actually have this icons that's shown against the products to show you, right, what are the things that's been covered, what are things that are not, and then what can you use CPF and so on and so forth. Okay, things like that do happen, right? Can I say that things like that do happen for technical issues? So I really don't exactly know what went on for this. So nevertheless, I hope that my explanation managed to guide you through how to use this, all right? Then beyond that, right, if you want to appreciate more of the features, right, look at the toolbar over here, right? Getting started, if you click on it, you will show a video to give you an introduction of what is this platform all about. Okay, and as well as for the understanding, there is some glossary that you can refer to, calculators. For general question that's asked about life insurance. Product-wise, it is exactly the same here, okay? And then about us, you can read about the background here. Now, you just need to click on different types of product and you will show you the difference, the category that you need to key in. Okay, okay, let's look at this. Let's use term. Let's take for example term. Okay, using the same examples that we have, non-smoker, annual, let's say term 15 years. Okay, and then let's say coverage amount that I want to be insured 100,000, critical illness, yes. And then I would like to look at the lowest to the highest. So what it does here is that it will generate, this one works, yeah? It will generate quite a few of the products over here, right? All you need to do is just to drag 4 of those that you think that, it's something that you would like to look at, explore, and then put into this box. They'll put it side by side for you to do a comparison. Okay, so try that. Do you think you are able to do so? You can try this on your own. I'm sure you can, right? Otherwise, you can revisit this website again, this recording again. Okay. So, of course, someone asked a question very quickly, right? Will all the insurance company listed in the Money Sense get access to all my information, including all insurance policy with various company? What I understand is this, right? That when they put in the information, you are the one looking at the information. But for extra comforts, do visit my Money Sense, the platform, my Money Sense just now, right? Let me just go back there. All right, and then they will explain to you some of the features, the security that's in place, the consent that you need to give in, and how the information is, the flow, whether periodically or real time. I understand it's periodically, and then you'll be looking at on your own. That means if let's say I pull from the 7, right? I'll be looking at the 7 at my side. I mean, the rest of people, not that I'm aware of, they can see lah. I don't think so lah, because the fact is that these are private and confidential matters, right? Okay, and I also understand the consent may be subjected to periodic renewal. So once you give that consent, right, if I'm not wrong, every year you need to reinstate the consent. Okay, so Chukiat, thank you for your questions. I hope I have managed to answer that. Okay, thank you very much. Okay, let's move on. Okay, before I leave all these devices, right, as in the helpful tools, so on and so forth. So we touch on 3 tools. What are they? One is CPF Estimator. Again, it's an estimator. We talk about My Money Sense, which is a dashboard for you to do your planning and look at one stop to look at the information. And finally, we look at Compare First for you to put in your category and generate. Of course, if I put it in and there's nothing that came out from it, it means that there's no such product, something like that. Yeah. So, but then again, I'm sure that I've tried it earlier and it managed to generate. I'm not sure exactly what happened. Once again, now, if everybody is okay so far, the explanation, if you're okay, I'll move on. Larry has a question. Yes, right. Larry has also answered that because you need SingPass, so there's some security in place. All good? Everybody good? If everybody good, I'll stay on this speed and then I'll complete the rest together. All good, huh? Okay, let's go on. Okay, let's all go on. Okay, if you look at some general guides, so after working all these numbers and then you realize that I need this amount and then I've got this budget for this. So what are there some general guides that can look to in terms of how do I then pay, how much do I need to pay and things like that as some form of reference? Yes, there are some general rule of thumb, right? But again, it's really subjective. Again, these are general, so you do look at your own situation and setting and do your own assessment. So it's a general guide, okay? So try not to pay more than 10% of your annual income on insurance premium, annual as in per year, right? All right, for life insured sum, right, approximately looking at about 9 to 10 times of your annual earning, right, basic life coverage. Again, this is really basic as in, remember we talk about standard of living and things like that. So it really depends on how you and me would, expectation and needs for the life insurance. So this is just purely a general guide. Critical illness, we look at about 3.9 times of your annual income. Okay. Now, let's assume we look at this general guideline, right? And then I'm going to launch a poll now for you to take a look by, let's say now a person is looking, have a certain income of, let's say 60,000 annual. What do you think the 3 choices that reflect to you in the poll? Which one do you think is correct based on the general guide? Okay, let's do that. Okay, I'm going to launch a poll now, and then you'll see the poll going out to you, and then you could then select, right? So number 1 is premium equals to or more than 6,000 a year. Number 2, about 60,000 for my basic life coverage. And number 3, critical illness insured sum about 234,000. Wow, that's a lot of money, right? Coverage here. Okay, let's do that. Okay. Okay, I'll wait for the response to come in, but meanwhile, just take note that, for the 10%, right, is a general rule of thumb that is take some, so generally you take reference for reference again. Right. Second one is 9 to 10 times. You can see this number being in the Life Insurance Association of Singapore in one of the Q&A. Actually asked about, a question was being asked about, how much is sufficient for coverage. So 9 to 10 times, it's a guideline that's been provided under LIA. And over 3.9 times, it was based on one of the paper, I think it's a survey, market survey paper that talks about how much was needed. This paper was done for Life Insurance Association of Singapore. I think it was done in 2018, thereabout, right? And 3.9 times was being cited. Again, do look at our own situation to see whether it fits us or not. Okay, the numbers are in, right? So we have a 0 for premium. Choice number 1 was 0. Choice number 3, 33%, and majority of us, 67%, goes to number 3, critical illness. Well done. The answer based on the general guide, right? 60,000, right? 60,000, 10% will be 6,000. So it says not more than. So it's a trick question. So the option is actually more than. So that's wrong, right? Okay. So again, 9 to 10 times, right? 60,000 or 600,000, right? So 60,000 basic coverage as an option number 2 is not exactly based on the general guide, right? And then critical illness 3.9 times. So if you take 60,000 times 3.9 times, that will give you 234,000. So well done, everyone. Now we all learn together, am I right? So even we got it right or wrong, doesn't matter. We learn from it together, and then we could then deepen the sharing from here. All right, very good. Oh, yes, Chuket, I saw your number 3 there as well. You put in the number. Thank you very much, right? So if there's no further question, let's go on to talk about the different products. Okay, it's a very generalized summary of the products, yeah? Over here, life again is unbundled terms, bundled whole life, endowment, and investment-linked products. Now, what is unbundled here? Term life. Okay, I'm going to summarize it in a nutshell. It means that you are purely looking for protection. That's it. So it exists for X number of time, let's say number of years, right? It may be 10 years, 15 years, whichever year that the insurer is offering. Now, within that period of time, if you buy a term, you'll be covered based on the terms and conditions for the protection. Now, is there any cash value? No. That means what? When something happens to me based on the terms of claim, I can be compensated. But otherwise, right, I get nothing back. Even if I surrender, expire, cancel, nothing back. Okay, so there's no cash value. Hence, right? Hence, it's the premium, right? As compared to the rest of the products, are cheaper. It's cheaper. It's cheaper. It's more affordable. I wouldn't say cheaper, more affordable. But the challenge here is this: because of it's limited to a certain X number of years, right? So if you decided to extend it, then it really depends on the insurers, the underwriting, whether are they prepared to underwrite, or what kind of premium are you looking at the different stages of our life. So something to think about, okay? But if you are just looking for protection only, which insurance primarily purpose is for protection, right? Then term is something that you probably would like to consider. Unbundled whole life and endowment. Okay, now whole life means you cover for the rest of my life until I expire or until the stipulated age by the insurer, right? Over here, endowment and whole life, both of them has cash value based on the documents. Of course, end of the day, later I'll show you some documents, how does the cash value looks like, the surrender value, in other words. So if something happened to me, based on whole life, the terms and conditions, I can then get based on terms and conditions, I can then get paid out from that claim paid out. But if let's say nothing happens to me, and then halfway through I want to cancel it and surrender it and take back some money, based on the terms, based on the schedule, they call it policy projection, again declared guaranteed amount, then the amount, then we can cash it out. Likewise for endowment, right? Based on the declared dividends or bonuses that has been added to the guaranteed amount. Sounds very confusing, right? Don't worry. Just remember guaranteed, non-guaranteed amount. All right. This amount, right, will then be paid out to us. But at the onset, right, when you are just starting on the insurance part, just remember when you just signed or just started the coverage, before you start the coverage, look at the policy illustration, which will then tell you what is the guaranteed amount, what is the non-guaranteed amount. Non-guarantee is just purely based on illustration to show you how is it like if the insurer's investment perform up to a certain standard of returns. Excuse me, upon investment returns. Okay, I'll explain a little bit more later. So because of these features, right, it's comparatively more expensive as compared to a term. Now, endowment, the difference between endowment and whole life here, one of the major differences, endowment is just like term. It only exists for a certain period of time, and on expiry date, it stops, all right? And if let's say there's no claim, you get certain cash payout from there. Now, this is the third one under bundle. It's called investment-linked insurance product. Okay, very quickly, insurance-linked product here, it provides some form of protection, but the proportion of protection as compared to whole life endowment tend to be slightly lower. Why? Because the focus is more on the investment side. So what it does is that when you buy such a product, right, the premium-wise, it comes with a price tag. Huh? So it could pay one lump sum or pay periodically. And then with that amount, right, they will use that amount to buy the funds that you're investing in. So imagine if I'm the insurer and you're buying from me, all right, I have 7 funds that are under my pot. You can only buy such product investing in the 7 funds that I have. You can't invest something else, right? The good thing is this, you can switch between the funds within the pot of this insurer, but you cannot switch out, okay? You can increase the amount, you can reduce the amount, and then, or you can switch the funds, but it all comes with some fees and charges that you should be aware of, okay? And so therefore, comparatively, there is no cash value, no guaranteed amount, meaning what? It's purely relying on the investment. If the investment fails, you get nothing back, right? So there is a potential risk in terms of investment risk, yeah? So just be mindful of that. So protection-wise, okay, let me just sum it up. Actually, I wanted you all to contribute, but in terms of time, I have lots of other things to cover, useful things that, I will just sum it up here. For protection, term, whole life offers that. Why? Term is purely for protection, as we know. Whole life is for the rest of my life. Endowment-wise, there is a certain level of cash payout, which is somewhat like saving like that. All right, so protection-wise, comparatively, you have to consider whether is it sufficient for your covering. ILP, it really depends, all right, because proportionately the investment part as compared to the protection part is higher, the investment part, okay? Children's education. Now, if you talk about children's education term, if I'm saving up for my children's education, I can't use a term, right? There's no cash value unless something happened to me. Okay, unless something happened to me, and we don't want that to happen, right? So, and then whole life, right? Because it's stretched longer, the premium will be for the rest of my life. So the premium is comparatively higher for such a purpose. The surrendered value may then, I could then possibly plan this for retirement, which I'll show you later. Endowment-wise, right? I can time it in such a way that the cash out could then match my children's education where the funds needed. ILP, same thing, all right? Again, you need to have that investment, the appetite for risk, right? Unless, otherwise, right, it's a risk that you're taking on. If it doesn't perform, then it could fall short. Retirement, I think I've explained that, term, if I want some cash out, term doesn't give you any cash out. Whole life, yes, right? If I surrender it halfway, my dependents are grown up, I don't need the money anymore. Don't need the protection anymore, I may surrender value. And then endowment, if I time it, at such a time that I could cash out, okay, ILP, depending on my risk profile again. Mortgage, all right, mortgage again, possibly so. Why? Because I take a loan, let's say for 20 years, 30 years, so I time the protection to match that mortgage. Whereas for whole life, it's go beyond the loan coverage, right? So yes and no to some extent really depends on the coverage. Endowment, not likely. Why? Because the protection part is compared to the may not be sufficient. So it really depends. If you want to up it up, then you could possibly attract more premium. ILP, if something the investment goes wrong, I might not have any money to pay for my mortgage should anything goes wrong. So far so good. Okay. right? Is there any maturity for whole life policies? Okay, Chu Piet, to answer that, right? It generally covers for whole life, but I do see some insurers that they do cap it at like 99 years or so on and so forth. So you got to find out, specifically the policy that's being offered by the different insurers, and then check on that. Whether you're comfortable, if let's say if they're covered until 99 years, are you comfortable with it? And then Dave's asked, what about for retiree with no more annual income? Absolutely. So we're going to touch on that, Dave, later on some of the scenario that we're going to share with you later. Okay. So now we have just did a basic introduction of the features of different products, right? Unbundled terms life, right? Bundled endowment, whole life, and ILP. Well, whichever name you call it, you generally fall under these four categories. Okay. Now, again, now we will look at what, and we also look at the features. So what kind of features that meet protection, retirement, etc., etc. Now let's look at documents. This is an interesting part, right? Documents. Now this is when you are presented with the documents, right? Do look out, make sure that you are looking at the right type of product that you have been discussing and planning to buy. Example, a name of a plan, right? Amount of protection, is correctly reflected there. The benefits that have been discussed and agreed upon, the premium, and here the projected cash value, which I'll show you some samples. What do you mean by projected cash values? Now remember, when we enter into a contract like this, it's a legal contract. It means that it's binding on you and the insurer based on whatever terms that's been laid out there. Okay, so how does, generally speaking, some of these documents, you include product summary, you include policy illustrations. So let's look at some policy illustrations based on the following products. Okay, endowment, life, and investment-linked products. Okay, let's start with endowment. So here you will see a policy illustration, and how do you tell? There is both death as well as surrender value. So look at the title over here. So you see a death benefit, okay? And how you interpret this whole entire table is this, okay? First, look at your end of policy year/age. 1/36 means when I'm 36 years old, this policy is year 1. When I'm 40 years old, right, this policy is in its year 5. Okay, so that's how you interpret the table. Next, you look at your basic premium. This is cumulative. This is not per year that you are paid, but cumulatively over the years, how much you are paid. Right now, this is again an illustration. That means what you have not paid yet, and right, you may have already signed and got the document or something like that, or it's been presented to you for consideration, so you know how to then interpret some of this number. Now let's move on. Then the next few columns is you look at guaranteed. This is the amount, since we are talking about endowment, right? So these are the amount that says over the years, what are the guaranteed amount you sure will receive? Meaning what? Regardless of the performance of the insurers, right? This guaranteed amount is given to you, okay, by the insurers. And then the other two is non-guaranteed. Non-guaranteed means it really depends on the performance of the insurer. In this case, right, for illustration-wise, the number used over here is 3% and 4.25. Now, these are standardized, okay? Standardized for endowment presentation. You will see it again in what? In whole life policies later, right? So remember, 4.25 is not confirmed that you earn this. It's just a projection that they are using 3% and 4.25. Okay. Now let's go on. Now let's look at this. Okay. Now here we are talking about the surrender. So still we are on endowment, right? Surrender value now. Now how do you tell? You look at the heading. So surrender, right? Then the rest of it, if you look at the heading, is exactly the same as that for endowment. Okay, right? Over here, 3 to 4%, like what I mentioned, is standardized, right? Is for illustration. It's not a guaranteed returns. Okay, so don't take it that no, you sure will get a 3%. 4.25. I mean, just a side note. So what it does here is this: when you buy endowment, certain amount of the premium goes to buying your mortality charges, to pay for mortality charges, basically protection. And the rest of it, right, goes into a life fund with the insurer company, who then will use the money for investment. So based on the stipulated some documentation or things like that, then they will determine how much to pay out for the endowment along the way. And should there be any confirm, that means when they do declare a bonus or dividends, right? Then the amount that's been declared will then be added on to your guaranteed amount and become guaranteed. Otherwise, it's remain as a projection. Yeah. Okay. So this amount, when you look at, if you're at the onset, right, when you receive a maybe indicative or projection, this amount is not guaranteed. Huh? This amount includes the guaranteed and non-guaranteed based on the respective column that's been shown here. Now, let's do some practice on this very quickly. Yeah. Let's look at, if I am into my, if let's say I buy this property, this endowment plan, based on this schedule, what's the guaranteed amount at year 2? What's the guaranteed amount? Anyone help me put into the chat box. What's the guaranteed amount at year 2? Year 2, meaning what? I am 37 years old. Am I right? Year 2, 37. Anyone help me put into the chat box if you got a number there. Otherwise, right, think of look at the numbers and then go through what I've explained to you earlier and how to then interpret this. Yes, Chukia says 0. Larry says 0. Well done. I believe the rest things likewise, right? Absolutely spot on. Spot on, right? 0. Now, let's up the question a bit, make it more difficult a bit. What if on the 10th year, what is my guaranteed amount? I will do so as a poll, right? I'll launch a poll out there and then for you to respond. Okay, let's do that, right? Launch a poll for you to respond. There are a couple of numbers in the poll, right? Look at the numbers and then ask yourself, which one based on the slide that has been shown here. What is the guaranteed amount? What is the guaranteed amount? Okay, so the poll is being launched now, right? You will see it popping up. Yes, I think it popped up already. So there's I think there are 3 to 4 options for you. All right, so let's do that, right? Put it in. What do you think? What do you think is the number if at the age of, on the 10th year? Okay, I'll wait for the response to come in and I'll share with you the input, yeah? Okay, good. So the different columns represent different things. So when we are looking at our own documents, right, appreciate what are these columns for, and then make sure that we interpret it appropriately. Yeah. Okay, the results is in, right? Option number 1, all right, 0. No one choose that. All right. Option number 2, 0%, and then option number 3, 100%, 5224, and then 18,000. Nobody choose that. Well done. I'm so happy that we are all doing this together. Why? Because it deepens understanding of this page, right? So this is the guaranteed amount. Absolutely spot on, ladies and gentlemen. Well done. Okay, let's move on. Whole life. Okay, I'm going to speed up a bit because of time. All right. So let me know. Right, if you have anything that I need to clarify, I will reserve it at the end of the session. Whole life here, again, look at the title. Then you will tell whether is this death or is it surrender value. Now, whole life, again, we end of policies at total premium, exactly the same interpretation as the endowment, except that this one stretch all the way to 100 years. Okay, and then this one is the cumulative premium. Now, let's look at this guaranteed amount. Now, this guaranteed amount, then you will stipulated here. This is a guarantee that's payable to you. Again, they will then look at what? The projection, right? Remember, there's this payout, right? So let's assume 3%, 4.25. Again, these are projection, not cast in stone, not something that you receive. It really depends on the performance of the insurer in terms of their investment or whichever that comes to this, right? Now, then how do you then determine the death payout? Assumingly they manage to achieve 3% or 4.25, huh? Let's assume. Huh? So the payout will go this way. Yeah? So the payout is this. The equation is this. The higher of A versus the sum of B and C. So A compared to B plus C. B plus T together versus A. Whichever is higher becomes the payout. So therefore, based on this, right, okay, the payout is determined. If you realize this is 300,000, this plus this is smaller than this, so it's 300,000. 150, this plus this give you higher than 150, hence 191,000 plus. Okay, so okay, right? Okay, good. So let's move on. Likewise, for whole life surrender value, what you look at is you look at the surrender value here. Now, I'd like to do a poll here and I'd like to ask you this question. Okay, the interpretation over this same thing, right, is declared. Once it is declared, you add on to your, if it is declared along the way, and then you add on to your guarantee, then become the amount that will guarantee to be paid to you. Otherwise, if you look at this presentation, right, these are all projected non-guarantee. Okay, so if let's assume that let's assume 3 and 4.25 something that's that's been achieved. Let's assume where do you think is the break even? Meaning the amount of premium that you have been paying cumulatively. Where do you think you'll break even? All right, I'm going to launch a poll out there. You will see a poll of a few choices. Age 40, age 66, age 75. All right, and then you choose. Okay, you choose. Right, the poll is being launched already. I think it's out there. Yes, good. So let's look at it and ask yourself, all right, which do you think is the choice? Where do you think is the break even? We'll be very interested to know. Am I right? Right. It's because why you want to see whether when have I make sure that I claw back my premiums, etc. like that. So let's look at it. All right, and then I'll wait for you to input the poll. Make your choice. Everyone is given one vote. So put that in. Now we all learn together. Okay. Good. Right. So remember, guaranteed, non-guaranteed. This is the presentation is the same as endowment. Okay. This is under surrender value. Yes. Okay. And then this, of course, this whole life, so it's longer. The premium itself, the payment. Okay. Let's look at the numbers while I wait for the numbers to come in. All right. It shouldn't take too long. Right. There's a few numbers given here. Right, age 40, age 66, age 75, which one? Okay, 50-50, in fact, the response, right? 50% says 40 years old, right? Another 50% says 75 years old. Okay, let me, just based on this, let's say it's 3%, right? So the assumption is 3%. It will be 75 years old. 75 years old, 40th year, right? 40. Okay, if you talk about age, right? So you'll be 75 years old. If you talk about years, it'll be 40 years. Okay. And the break even here is this 87,000 plus. But if assuming you manage to achieve the 3%, this both plus together would have exceeded your premium. And that's roughly the break even point. Okay. Good. Let's move on. All right. Let's press on. All right. And then we talk about investment linked product. There is no guaranteed cash surrender value. Remember, it really depends on the performance. So how does death benefit being determined? It's either the higher of both guaranteed, non-guaranteed. For death, only death there is a guaranteed. Surrender, there's no guarantee. Okay, so guaranteed plus non-guaranteed, the performance of the funds, right, versus the surrender value, whichever is higher, right, that will then translate into the death benefit if I pass on, right. Based on the terms. So they'll measure against this rule, okay? Now, again, look at this 4% and then 8% is different, right? It's different from whole life. It's different from endowment, right? So for the 8% is it's for investment linked product in terms of presentation. Over here, right, this is the non-guaranteed amount, right, subjected to the performance of the funds, okay? So cash value for 8% and then standardized in terms of presentation in Singapore. Okay. And then so really it really depends on whether even if it says 4 to 8, if it doesn't perform, then it will really depends on the performance of the investment. Now again, remember this, there is transaction costs, there is a fund manager and things like that. All these costs will then go to be paid first before paying out to you. So all this you need to take note, yeah? So we're done with documentations. Let's move on to some of the consideration, putting it all together, all right? And then some of the checklists that we can then look at. First, ask yourself, what's the purpose of buying insurance? Second, am I looking at some investment returns, right? And then we can then see which product matches that. And then can I manage my investment? Can I manage it? If I can't manage it, then perhaps better than putting the money there, do nothing, put into something that helps me to do some investment. And of course, you must be comfortable with that kind of arrangement. Okay. And then budget, how much can I spare for the premium? And could I really afford it in the long run should any situation happens? Okay. Right. Now look at suitability. If let's sum it up, put everything that we have discussed so far into to these few questions. So if you only need insurance coverage that means you want only protection at an affordable premium. Which one will you choose? Bundle or unbundled? Okay, I'd like you to think about it. All right. You can feel free to put in the chat box if you wish to. Otherwise, think about it, make your choice, and I'll flash the input very shortly. Yeah? You go for unbundled, right? Right. Protection and then with the premium. And then next question is this. Okay. Yes, absolutely. Chukiat, you said unbundled. Well done. Well done. Next question. Now, if you need both protection and you wanted some cash performance of based on the funds that you're choosing for investment purposes, which one will you choose? Unbundle or bundle? Right? So pause a bit a moment. Now it's application time, right? I always believe in this. Coming for talks like this, if there's interaction, it helps us to apply. When we apply, it deepens our understanding on the concepts and principle, right? So therefore, by looking at this, can I hear from you? Right? Do you think it's bundle or unbundled? It's bundled, right? So you probably need, be exposed to some form of investment. Of course, with this, there are two that give you the guaranteed amount. Important thing is this: work out your affordability, right? Work out your affordability. Absolutely, Larry, you're right. All right. Bundle with investment, right? Investment. So guaranteed amount possibly you're looking at. Now, what is suitable? Okay. Now I'm going to just flash this to you very quickly. My concern is premature death. That means I die before my time, unexpectedly, or if I totally permanently disabled, right? Disabled. So what will I be looking at? Term insurance giving you the protection, right? Whole life or ILP, depending on my risk profile as well as my intent for the coverage, how far, right? Protecting my family, my loved ones, and some cash when I retire, which then goes to answer a question from our friend here. Let me see, where is, okay, I think I missed that comment in the chat box. One of our friends here in the presentation asked about retirement. Whole life insurance or buy term invest the premium difference. Meaning what? If I were to buy, let's say, for example, if I buy whole life is $500 premium every month, but I buy term, it costs me $100 or maybe $200. So what I do is that instead of buying whole life, $500, I buy $200, and the difference of $300, I actively invest them. Now, the problem with this is this, right? The good thing is this, that you can then do the investment on your own. You can then decide what you want to invest. But the thing to look out is that you to make this meaningful, you have to actively invest. Meaning what you put into maybe Singapore saving bond or something like that give you returns rather than putting in nowhere and then earning nothing. Then it becomes opportunity cost to you, right? Assurance of cash at specific time. Okay. Now over here you can look at endowment. I think it's self-explanatory, right? You can look at ILP, whereby you can cash out partially or cash out all, whichever, but of course there's a clause involved here. Now, tips, what to look out in making decision. Summarize all your policy so that you have a one-stop. And one way to do so is you can then consider My Money Sense platform. Yeah. And then review your insurance portfolio regularly. Why? Because at different stages of our life, things change. I like the question that Larry asked, all right? If let's say, I just started work, and then along the way, I have other obligations. I form my family, I buy my own house and things like that. So situation change, things change. So therefore, how does it impact my protection needs, right? So these are the things to look out for to review. And update your insurer when personal circumstances change. Like, for example, even if you shift house, please let them know. Otherwise, you're like me, like that. Same thing, when I moved house, they sent to the wrong, a different place. So you need to update them, make sure that they are updated. Of course, you can go through emails depending on the insurance, the person that's providing you the insurance. Before you consider, I can't emphasize this, all right? Affordability, think about it carefully, what I could afford, what I can't, right? Don't overbuy and then ended up, later we'll share with you a case study, yeah? Prioritize. Again, there's so many things to cover. Let's say I work out my whole long list of needs, but I only have certain limited resource, right? So money, budget. So what I do, I prioritize. I take care of those, maybe not the full coverage, partial coverage, better than none, right? Within my affordability. So that's where you do the prioritizing. And that also relates to what Larry has mentioned, right? On in terms of what to buy, how to buy with it. And then switching costs, be mindful. Where if you want to consider switching, there is a cost involved. Why? Because the underwriting, you may not be able to mirror back the whole entire coverage by the new insurer. And so by switching over, there may be some exclusion, or the premium may become higher because they need to underwrite certain risks based on my age, which is different from the earlier policy I bought some X number of years ago, right? So things like that you need to be mindful about. So which one do you think, Joseph over here, me, I needed 200,000 at any point of 18 years time for my children's education. And I could afford 12,000 of premium, right? Every year premium. Okay. Now, but I'm also afraid that, within this 18 years, something happens to me. I want to make sure there's 200,000 payout so that, my kids' education can go on. So with this information in mind, right, I would like you to choose what product do you think I should have. All right, I'm going to launch a poll 5 out there, right? And then you take a look and ask, there will be a few term, whole life, endowment, or ILP. Which one do you think best suits my need? Based on the information given. Now we are doing application now, right? We are applying the information now, right? So let's do that, right? I think the poll has been launched already. Wonderful, right? Good, wonderful, right? Good. Okay, I'd like to hear from you in a short moment. My colleague will be sharing with me the input, and then we could then consolidate this, and I'll share with you some of the takeaway from here. Yeah. Okay, good. We are learning something here together, right? Are we? We are, right? I hope so. Right. Some good takeaway for all of us, or if not most of us, right? Okay, Dave, I saw your question. I will address that later during a Q&A. Yeah. Okay. Thanks for the question, Dave. Okay, let's see what is the outcome from the poll. Okay. Okay, now poll number 5, term 0, okay, whole life 17%, endowment 83%, and then ILP 0. All right, good. There must be something or some criteria that you've considered carefully, right? Well done, everybody. In fact, right, it really depends on Joseph's profile as well, right? So things to think about is this. Do all the plans provide the insurance? So you take all these products and then side by side, you ask yourself, do any of this provide me the protection that I need? Okay. And then second is that, are they something that I could afford it, right? Does the premium for the coverage of the 200,000 is something that I could afford? Valid question, isn't it? Valid, huh? And then if I am prepared to take on risk, then, if I'm prepared to say that, no, it's okay, I risked it out, even if I don't get the 200,000, which is not the case for Joseph here, right, then probably ILP. But I'm glad nobody chose ILP because what he wanted the 200,000 in place there. So well done, well done. So summary, right? In summary, very quickly for this case, endowment, yes, insurance, all of them provides insurance. In fact, I put in here, life, invest, buy a term and then invest the rest. Remember what I've shared earlier? Buy term, invest the rest if you're actively managing your investment. And then liquidity-wise, all right, investment link possibly so, perhaps so. It really depends on the profile of Joseph, whether is he prepared to take the risk. If I'm risk adverse, then very likely I may not go for this product. Okay, risk very high, low, high, and need to monitor, right? Endowment only because it's self-run and then declare accordingly based on the bonus or the adds on to the guarantee. And then investment link, yes, you need to monitor. Why? Because of the performance, and likewise here. Flexibility, no, but you can switch to other funds for ILP with the cost, okay, within the portfolio of the insurance company. And fully flexible, why? Because it's in your control for the investment, portfolio. Okay. So I hope that this is helpful in this sharing. All right. Discuss with your financial advisor with the understanding of what you need. Discuss with your financial advisor. Hear some opinion and guidance, right, before you decide what to do. Okay, so now some people ask, okay, is there a way to cost me less? Of course, there is the thing called direct purchase insurance. Okay, let's sit back and watch a short clips, right? What is direct purchase insurance?
What is direct purchase insurance? Direct purchase insurance, or DPI, are term and whole life insurance products that you can buy directly from a life insurance company without paying the commissions and fees to a financial advisory or FA representative. Since no commission is paid, you will end up paying lower premiums. The broadly standardized features also make it easier for you to compare products when deciding which DPI to purchase. DPI products can be identified by the prefix direct in their product names. Who is DPI suitable for? If you know which type of insurance will meet your needs, how much coverage you need, and you don't need any financial advice, DPI is for you. However, if you're unsure about how much coverage you need or what insurance to buy, you should consult an FA representative. Types of DPI. There are two main types of DPI available: term life with total and permanent disability or TPD cover and an optional critical illness or CI rider, and whole life with TPD cover and an optional CI rider. Both types also cover death and terminal illness. The features of DPI are broadly standardized for easy comparison. Read the small print, as not all DPI products are the same across life insurance companies. You can buy a DPI coverage of up to $400,000 per insurer based on your needs. However, the maximum sum assured is aggregated for all term DPI and whole life DPI at $400,000. This means that your total DPI coverage cannot exceed $400,000 even if you buy from different insurers. Here's a link to read about buying direct purchase insurance. If you've made up your mind to buy direct purchase insurance, consider the following steps before purchasing. Which insurers offer DPI? You may choose to buy directly from their customer service centers or websites if available. Do your research. Understand your own insurance needs. Use budget and insurance coverage calculators to determine if you can afford the insurance policy and how much coverage you need. Here are some useful links. Compare. Shortlist 3 to 4 products and compare their features and benefits on comparefirst.sg, an online portal that helps you compare products among different insurers. Compare First was featured in the first video of this series. You can also compare the different types of DPI as well as between DPI and non-DPI in terms of premiums, features, benefits, cash values, distribution cost. Buy directly. Select the product that meets your needs. Buy directly from the customer service centers or websites, if available, of the life insurance company. Before purchasing any DPI, go through the DPI fact sheet and complete the checklist that you will receive from the life insurance company. These documents set out important information that you should consider when buying DPI. Here are the takeaways. DPI is for you if you know which type of insurance will meet your needs, if you know how much coverage you need, and you do not require any financial advice. Consult an FA representative if you're unsure about how much coverage you should have or what insurance to buy. Do your research and compare the DPI products using comparefirst.sg before buying.
All right, very quickly, the next few slides, I'm going to sum up some of the salient points as shown in the slides. Now, remember, compare first. I brought you through some demonstration that didn't work out very well. But remember, direct purchase insurance product, that's where you can find it. Okay. In summary of what is being covered in the slides, in the video, direct means you buy directly from the insurer without any financial advice. Okay. How suitable it is, I will talk about it later. For whether it is suitable for you and me. Now, for direct purchase insurance, they only cover terms and whole life insurance product, right? It does not provide for endowment policies. Maximum 400,000. And then respective cap, which I will show you shortly, the cap on them. But in total, right, 400,000. Okay. And then how to tell whether this product is it a DPI? You see the word direct, this shown here, direct, in front of the product, and you know that this is something that you'll be buying directly. Broadly, the features are standardized, right? Broadly, yeah. But that doesn't mean that in my other details, right, may be the same. No, you always read the fine print, right? There may be some differences in terms of certain features. So do read the fine print carefully and do your own comparison. Now, how do I know whether it's suitable for me? First, I must, if I understand the insurance type that best meet my needs, that means I'm aware of the products, I know what I need, I know how much I need for the coverage, and I don't need any advices, then possibly I could consider DPI. Otherwise, right, perhaps approaching a licensed financial advisor would be something that of help. Okay. Now, generally, these 4 areas that I would like to share with you. Sum insured, I think we have covered that, right? Minimum amount is 50,000 for the purchase. Maximum up to 400,000 in total, aggregate between these two, right? In their respective numbers shown here. Entry age at least 18 years, right? And there may be some maximum age depending on the DPI that you're buying. So do check it out. I know the time now is 1:30. I hope that you could afford me another few more minutes. Let me just run through some of the important points so that we could then appreciate more on some of the cover. All right. Policy coverage, right? For terms, it could be 5-year renewable, 20 years, non-renewable up to 65 years old. Whole life, right? It covers, example, maybe up to 99, depending on the insurer providing it. And then for DPT, total permanent disability, it's capped at 65 years old. Payment period, right? Term will be the same as the coverage period. Whole life, you can choose between 70 years old, up to 70 years old, or 85. 70 years old means what? You pay your premium until 70 years old, whereas for 85, you pay until 85. The difference here is this. Let's assume the same premium amount. 85, it looks like you're paying premium lower every periodically, right? But in total, it's more than 70 years. 70 years total premium. So something to look out for. Steps to buy. Do your own research, compare the result using Compare First. Some of these things that you want to look out for features, premium, benefits, other costs. And finally, when you're prepared, take actions by approaching the insurers to buy, to do the purchase inquiry. Yeah. Okay. Now, when you approach a licensed financial advisor, important things, a few things to look out for, right? Make sure that they are licensed. Why? Because when they operate under the framework, regulatory framework of MAS, and then there is a channel of recourse that you can turn to should there be any dispute handling. Yeah. And then if you're in doubt, always clarify whatever is presented to you. Not sure, always ask why. When you sign that paper, you'll be for X number of years or even for the rest of our life. Be careful, verbal promises. Make sure that whatever promised to you in terms of return coverage, etc., or features, make sure it's captured in the contract and not something verbal, because down the road I don't know whether my agent will be the same, or my financial advisor, or whether, etc., etc. So avoid dispute, all right, clarity. Sign only when you fully understand it. I think that's a given. And make a copy and know where you keep it, especially our beneficiary, the person that if I pass on suddenly because of accident, things like that, they know where to look for it. And then, things like that. And then finally, as I promised to you, giving you an example, all right? Example, in this case, I'll just narrate to you the example over here. Now, this is a real case. It happens was reported in 2015. Briefly, right, the madam has $100,000. He walked into a bank planning to, I think it's for deposit. Ended up, right, after visiting and for a while in the branch, he walked out with with an air fryer and a steamer, as well as an endowment plan that's 10 years that require her to pay 5-year premium. And the premium that need to be paid is $40,000, right? So over 5 years, so that translates to $200,000. Of course, with all the investment projection and things like that. What happened to this case is this. Into his third year or two and a half years, the whole entire policy lapsed. Why? Because the ma'am that's shown here was unable to service the premium. Now let's look at some details what happened here. Her annual income was $30,000. That's annual income. She has some, I think she has at least 2 kids. And to support the family and things like that, $30,000 can't be just for paying premium. And we realize the premium is $40,000. Even with the saving $100,000, if we work out, it probably will last me for if I have $100,000, so probably it could last me for 2.5 years. And then things happen, elapse, right? So it's a sad story, but it brings to the point about, firstly, do we need the protection? Secondly, right, affordability, and it's a very real thing. Am I right? Affordability. So do consider very, very carefully, considering about affordability. Now we come to the end of the session. Let me just share with you some of the resources that we have for you to follow up after this session, right? But key takeaway, do remember, understand the reason and purpose why you buy insurance, how much is needed. We have shared with you some tools that you could use to give an estimate of the amount before you speak to your financial advisor. Make sure it's affordable, something that you can work within your means. Features, understand it, and how does these features of the product match your needs? And then if I do have limited resources because because of pay or budget, then I need to prioritize, make sure that if I'm set out for protection, my primary needs, I could then look at term insurance, perhaps as first consideration. Check my documents, because these are legal documents, as well as if I fail to pay my premium, what will happen? It can result in terminating my coverage. Okay. So we have come to the end of the presentation. 1.5 hours is not exactly long. Lots of things to cover. Please consider signing up with us for a workshop or even for talks or even the next webinar that's coming up. Help me by giving a post-evaluation assessment on this. Tell us why do you want to do this? Because why? Even though it's free and unbiased, we want to make sure that the effort, the resource that has been put in for you continue to be relevant to you, benefiting you in some way or another in the financial literacy journey. So your feedback is very, very important to us. So for those who have already done the training assessment, help us to complete this. Okay. And then for those who have considered some personal personal session, one-to-one session, we have here the financial health clinic, whereby you could sign up. Slots are taken up very quickly, filling up very quickly. So do that, whereby you'll be given a half-an-hour session with a volunteer, right? It's either one of our trainers or a volunteer, a licensed financial advisor volunteer, who will then walk through with some of the your personal information about your finances. Not to sell you things, right? Is to share with you perhaps some principle and concept about financial literacy that you may find relevant in your own setting, in your own personal setting, as financial conditions or setting, right? So therefore, do consider signing up, right? Otherwise, I I've come to the end of the session. I know that it's beyond 1:30, right? Now already it's about a few minutes into that, right? I will look at the questions if you don't mind, right? And while I flash to you, these are the platforms. Whatever question has been asked will be reflected in our Finlearn community, whereby you will see the response in writing over there. Okay, you can consider that. Otherwise, right, some more information that you can find out concerning this course is by visiting some of the links that have been shown here. Stay tuned with us, right? Facebook, Instagram, YouTube. Remember the DPI video that I showed you earlier? Now, lots beyond that, there's lots more resources that we have put in place at YouTube or even at our Finlearn Academy, whereby you can do e-learning, watch a video, and then learn something from there together. Yes. So otherwise, right, I'll take Q&A before I sign off, right? So let me just look at the questions, right? Thank you, Chiket. Thank you very much. I really appreciate your support and encouragement. That's so valuable to us. Thank you, Chiket. And then I have here Dave. Dave talk about payment holiday. Now, you really got to go back to your insurers and check whether is there a payment holiday available to you. I understand that during COVID time, there may be some, there's some measures that put in place, but you do check whether it's still considered to valid and relevant to you, right? And then for policy loans, if you take it, it comes with an interest rate. It comes with an interest rate whereby the interest rate, do check it out, right? Whether is something that you're prepared to accept. So therefore, some of them, they actually take it and loans and then offset against the cash value if the insurers allow them to do so, right? So therefore, do measure it carefully how it can impact your policy. Okay, so I hope that helps you. Helps you, Dave, on that. Okay, the implication would be there. All right. Southturn, thank you very much for coming for our talk. I hope that you find it interesting and useful. Thank you very much. Srichu, thank you very much. Thank you very much for coming. Thank you very much. And for the rest of us, all right, if you have any questions, feel free to put into the chat. I will be most delighted to address them. Otherwise, right, okay, Larry, I hope through this session, right, the question that you posted, they managed to answer them for you. Right, if yes, then give me a yes or something like that, so I know that I managed to address that for you. Yes. Thank you. Larry asked the question, for someone just started work, how do I think about types of life insurance necessary, which we have covered that. And as a single and living with my parents, I think we have also some parameters cover that, right? So Larry, I hope that managed to answer your question. And then we have here, Selson says, I have insurance from multiple companies. Is it advisable to consolidate? Now, consolidation may involve switching. When you switch, it really depends on a few things, the coverage, right? Remember, we talked about the coverage. If you switch from A to B and you're giving up certain protection or coverage, are you prepared to accept it? Don't just look at premium as one of the determining factor. Of course, both of them, if both of them are affordable, then you look at the terms, the coverage. If I switch over, I'm giving up something or exclude from something, then it's something that am I prepared to consider. So this is one crucial thing. Always go back and revisit the primary purpose of insurance, which is protection. Yes. So something I hope that I've answered that question. Right. Good. Thank you very much, everyone, for all the valuable questions that you have posted in. Okay. Right. Any more? If not, then I'll still stay on for another minute or two for the rest of us. Yes, Larry, absolutely, you're right. Pre-existing condition. Right. Be careful. The exclusion, we call it exclusion, whereby if it is you're switching and they exclude certain coverage that you are currently enjoying with your existing port, then by switching over, you're giving up something, right? Very good. Well pointed out, Larry. Well pointed out. Right. For the rest of us, have a great, I'm not sure it's late lunch, but have a great afternoon ahead. And I hope to see you again for our next webinar on financial planning for women. Right. Otherwise, stay on for a minute or two with me. If you have any questions, just put it there. Right. I'll be most delighted to discuss. Dave, thank you very much, Dave. We really have you with us, right? Asking valuable question. No, it's always good to share, and then and I hope that this session is benefiting. Manage to address some of the issues. Thank you very much, Dave. Thank you very much. Thank you, Larry. Thank you very much for coming. All right. Thank you very much, ladies and gentlemen. Thank you very much. Right. I'm Joseph. Hope to see you again for our next training webinar. Okay. Give us your feedback. Important. Remember the pre and post training feedback. That's where the planning team and things like that could hear you in terms of your feedback. To continue to deliver quality webinar in the fashion that the best that we could do to meet your needs. Yeah. Okay. Okay. Great. Wonderful. Thank you, everyone. Right. Thank you. Thank you for coming. Thank you once again. Right. All the best. Right. All the best. And put those questions, right? If you have any, put those questions into our Finland community. We have moderator to help you to address some of the questions as well. Okay. All right. Thank you very much, everyone. Thank you.